Welcome to Way to Commerce. Subscribe to Way to Commerce. Today we discuss preparation of profit and loss appropriation account. So it is very easy. We understand the concept. Okay. Our main objective is conceptual learning. In case of a partnership firm, all charges are shown in profit and loss account. All charges are shown in profit and loss account, and all appropriations are shown in profit and loss appropriation account. We know that the main purpose of preparing profit and loss appropriation account is to show the distribution of profits among partners. For example, interest on capital, partner's salary, partner's commission. So these are appropriations. Okay. To show them, we have to prepare profit and loss appropriation account. Generally, we follow the partnership deed. In case of absence of partnership deed, we follow Indian Partnership Act 1932. Okay. So profit and loss appropriation account is the extension of profit and loss account. So it is a temporary account. By nature, it is a nominal account. Remember, by nature, it is a nominal account. Now we go to understand the entries. Before we understand the entries, once again, we understand the entries based upon account. It is very much easy. Okay. So in profit and loss account, general profit and loss account, if profit arises, it is in debit side. If loss arises, it is in credit side. So if profit arises, the transfer to profit and loss appropriation account, what is the entry? Profit and loss account data to profit and loss appropriation account. So this is the first entry. This is the first entry. So debit the profit and loss account. If profit arises, credit the profit and loss appropriation account. If loss arises, what is the entry? The loss is in profit and loss account, credit side. So what is the entry? Profit and loss appropriation account data to profit and loss account. So this is the entry if loss arises. Okay. Now we discuss second entry, interest on capital. So it is interest on capital and salary, commission. These are appropriations out of profits. So what is the entry? Profit and loss appropriation account data to interest on capital account. So X capital, Y capital account. That means partners capital accounts. Next, in case of salary, profit and loss appropriation account data to partner salary account. Same entry. It is also appropriation. Next, commission also appropriation. What is the entry? Profit and loss appropriation account data to partners commission account. In case of certain amount transfer to reserves, what is the entry? It also an appropriation. That's why profit and loss appropriation account data to transfer to reserve account. So these are the entry. Next, in case of interest on drawings. So interest on drawings is the income to the firm. That's why we have debited interest on drawings. Okay. So here profit. So that means we debited means we add to this profit. So that's why what is the entry? Interest on drawings account data to profit and loss appropriation account. So these are the entries. After all these posting entries, we have to balancing. In case of profit arises, that means excess credit over debit side. So this profit transferred to X capital account and Y capital account. That means partners capital accounts. In case of loss arises, this loss is distributed to same X capital account, Y capital account. That means for partners capital account. So this is the profit and loss appropriation account. So it is simple. Now we go to the entries, we can easily understand. The first one is when profit or loss from profit and loss account is transferred to P&L appropriation account. We know that. What is the entry? In case of net profit, in profit and loss appropriation account, this side, that means profit and loss account data to profit and loss appropriation account. So what is the narration? Being profit transferred to profit and loss appropriation account. Next, in case of loss arises, what is the entry? Profit and loss appropriation account data to profit and loss account. So being loss transferred to profit and loss appropriation account. Next, for interest on capital, we know that it is an appropriation. So we debit to interest on capital. So first of all, interest on capital account data to partner's capital account, because for example this is capital account. So here AB or XY, so partners here there. So we partners capital accounts are credit amounts. So now we pay the interest on capital because we added to the capital accounts. That's why interest on capital account is debited first to partners capital account or current account, as the case may be. Next, for transferring interest on capital to profit and loss appropriation account. So this is the appropriation entry. We know that if profit arises, so what is the entry? Profit and loss appropriation account data to interest on capital account. I hope you understand. First of all, interest on capital. Allowing interest on capital is a expenditure to the business. That's why we have debited interest on capital account. So whom do you paying? Partners capital. That's why we added to the partners capital account. That's why we created partners capital account. After that, appropriation entry. Profit and loss appropriation account data to interest on capital account. Next, for salary of commission payable to a partner, we know that partner salary or commission also expenditure to the business. That's why first of all, for allowing salary or commission, partner salary or commission account debited to partner's capital or current account individually. After that, what entry we may have to post? Appropriation entry. What is the appropriation entry? Profit and loss appropriation account data to partner salary or commission account. Next, fourth one, for transfer of reserves. For transfer of reserves, what is the appropriation entry? Profit and loss appropriation account data to reserve account. This is directly an appropriation to reserve. Next, for interest on drawings. So we know that interest on drawings is an income to the business. That's why interest is credited. So partner's capital or current account debit to interest on drawings account. So in capital accounts, interest on drawings account is debited. Then only partner's capital account reduced. Okay. So what is the entry? For charging interest, partner's capital or current account debit to interest on drawings account. Next, second one, for transferring interest on drawings to profit and loss appropriation account. We know that. What is the entry? Interest on drawings account data to profit and loss appropriation account. After that, we balance the profit and loss appropriation account. For transfer of profit or loss, balance of profit and loss appropriation account. So if profit arises, what is the entry? So profit means what? Excess of credit or debit balance. So profit and loss appropriation account data to partner's capital account. In case of loss arises, partner's capital account data to profit and loss appropriation account. So this is the profit and loss appropriation account.